A working class hero is something to be.
Well, today is April 20th, or 420, known to many. And with me today, I have Mark Teran with Stanford Mortgage. Welcome, Mark.
Welcome, hello.
And today we're going to be talking about VA loans. I hear that you have some good information to share with us about VA loans. I don't know too much about VA loans, so I'm glad you're here to talk about it.
Awesome. I guess the first thing you need to know about a VA loan, right, it's for eligible veterans. They go all the way up to 517,500 in our area, right, with no down payment.
Okay.
And you can do a loan amount all the way up to $1.5 million, $1.5 million. Truth is, they can actually go beyond that, but for the most part ever I've seen, 1.5 covers it in our area.
That's a pretty big loan.
And the down payment would be the difference between that 25% of the amount of the loan size you're going for and 517.5.
Okay.
Right, so if you were 700,000 purchase price, it'd be 700 less 517.5 times 25%. That would be your down payment for a veteran that has full eligibility. It's pretty cool.
That's very cool.
Yeah.
So what kind of credit scores would we be talking about for a VA loan?
Good question. So my company goes down to a minimum of 580. Now, ideally, it's better for pricing wise that we have higher credit scores than that, but for the folks out there, they want to know, yes, 580 is the minimum credit score.
Okay, good to know. Are there any other credit issues that we could cover for a VA loan?
Well, yeah, there's some excellent points here to be aware of. Veterans, on the credit standpoint of it, they're a little more lenient in qualifying. So if they've had a past bankruptcy, even a foreclosure or short sale, they only need 2 years from the discharge date on a bankruptcy, 2 years since the foreclosure's been done, it's called the trustee's deed date, and 2 years since you've had your short sale. Most other lending products have longer time frames for sure. So veterans are re-eligible after 2 years.
That's amazing.
It's awesome.
Yeah, I don't know if many people know that, but 2 years.
Yeah, 2 years. And I'll add to that. So that's, when I talk about bankruptcy, I'm talking about Chapter 7. If they've had a Chapter 13, which is a repayment plan,
okay,
then normally it's 1 year that they're into their payout and they've made satisfactory payments and you get approval from the court.
Oh, wow.
Yeah.
That's really awesome.
It is.
Okay.
Yep.
All right, Mark, so what about interest rates for a VA loan? What do you know?
So the interest rates on VA loans are attractive because VA is basically a guaranteed loan, right? And because of that, it takes away some of the risk on the lending side. So since it's a guaranteed loan, the interest rates on a VA tend to be a little bit more attractive than on a conventional loan.
Okay.
Today, they're running approximately 4.5 and close to 0 points on the discount points.
Okay.
It's an excellent deal.
Yeah.
Yeah.
Yeah, 4.5 is a good rate.
Mm-hmm.
All right, let's talk about the requirements for a VA loan.
Okay, so for a real estate agent, one thing you really need to be aware of on a VA is that they require a termite report and clearance. And it used to be in the past that we thought that the veteran could not pay for any of that. And the way it is today, the veteran cannot pay for the termite report. Usually I think they run around 125. Does that sound about right?
Yeah, that sounds about right.
Yep. So you got a termite report, and then you've got potential repairs, right? We need to get a termite clearance. In regards to that, if the veteran chooses to, he can choose to pay for those repairs.
Okay.
Right? But maybe he doesn't want to. So depending on where you're at with your cash position, that might have a bearing on what homes you're looking at. You probably don't really want to look at fixers, right? Unless your veteran's willing to pay some, or you think you can negotiate that to be done with the seller. And in our market right now, you know, there's like limited inventory.
That's right. That's a really troublesome market to try to make negotiations like that.
Yeah, so you probably, in this market, which is a seller's market, we want to stay away from fixers. In a buyer's market, totally flips it around.
Right. Absolutely. Okay. What about the VA no-no? Is that something that is still prevalent today with VA loans?
I'm glad you used that word prevalent, right? Because we've all heard it, especially old school, right? I get a little gray hair here. And in the past, let me explain what a VA no-no is.
Please.
The first no is the no down payment that I mentioned, right? All the way up to $517,500. And that, in my experience, covers most of what I see for veterans. We have the jumbo. But so the first no is the no down payment. The second no is no closing costs. And that is achieved by the seller agreeing to pay all of the veteran's closing costs. Way back in the day when I was a young itty bitty lad in this business, we had more of a buyer's market, and I don't know exactly where it originated from, but I think a lot of builders started doing this. They'd have like the dollar down or $0 to get in and purchase a property, and the builders would pay all of the closing costs. And back at that time, it wasn't normally allowed by the lender that the other lending products would allow that. They would say, no, they've got to have X amount of skin in the game. But we're going to allow that for our veterans. Hey, they fought for our country. They got to get something out of this, right?
Yeah, absolutely.
So that's the second no. VA no down, no closing costs. Today, normally what happens with the limited inventory we got going on, the seller is probably not going to pay all of those closing costs. You might, because you're really good at negotiating, I hear.
That's right.
You might be able to get them to pay a couple thousand towards their closing costs. And you might talk to the lender and say, hey, Mark, if you could go up a little bit on the rate and give him some premium pricing or credit back towards the closing costs, we could potentially achieve it that way.
Okay.
And so that's where the realtor and loan officer need to work together as a team to figure out what's going to work best for a veteran.
Okay.
Right? Sometimes a veteran will say, you know what, I'm going to go ahead and pay those closing costs because I want to keep the lower rate and have a lower payment.
Yeah, makes sense. And what about for our veterans that are 100% disabled?
You're going to ask me about 100% disabled vets? I know nothing about it. Now, actually, here in Sacramento County, if you're a 100% disabled vet, you are going to get a property tax exemption. Of the base is at $134,706.
Oh.
Right? And if they're actually a low income, it's actually even higher. It goes up to $202.
Wow.
As an example, I have a 100% disabled vet I'm working with right now. The purchase price is $283, and on a normal transaction, we'd use 1 1/4 of that price and come up with their monthly property tax, which is about $294. In this case, I know that after we close and he files his claim with the county, proving he's a 100% disabled vet, they're going to take away $134,000 valuation from that $283. His property taxes on a monthly basis is only going to be about $153.
Oh, wow.
Sweet deal, huh?
That's a huge difference. Yeah.
Yeah.
Yeah, we all know our veterans need to save money where they can.
You betcha.
Absolutely.
And it makes it more affordable for them, and that's what we want to do. We want to help people get in where they can afford it and be happy.
Absolutely. And I have a question for you. My father-in-law, he's a veteran, and he used his VA loan in the 70s. And he's curious if there's some amount of money that he can still use on that loan. It has been paid off, but he's not quite sure.
Oh, okay. Well, the key words there are paid off.
Right.
Right? So a VA loan is actually guaranteed by the Veterans Administration, right? So they provide a guarantee, and when you get your loan, that will use up an amount of their entitlement. So if that loan were not paid off, then we would want to find out, well, how much of their entitlement was used, and there's actually a formula with, okay, here's what's left over, and this is how much a lender would lend with no down. If he's paid off that loan, then he's eligible again.
Really?
Yes.
Okay.
And the process, normally, most of us lenders can do this on an automated basis for applying for it. We need to get a copy of your DD-214. We're going to fill out a form based on that information, have the veteran sign it, upload it up to the VA automated site, and often we'll get the certificate of eligibility, sometimes same day, sometimes it may take a couple of days.
Okay.
Just depending on where their records are. So yeah, I'd let him know he's probably eligible, he just doesn't even know it.
That's amazing. Good to know. You can reuse a VA loan as long as it's paid off.
Yes.
All right. Well, thank you so much, Mark. Is there anything else that you want to go over?
I think we've hit most of the topics for veterans.
Okay.
So yeah.
Would you like to tell everyone a little bit about you and where they can find you?
Oh my goodness. I've been doing loans for about 32 years. I work for Stanford Mortgage, and I think there's going to be a little link below somewhere with my phone number, 536-4261, and my email.
Yep, we'll link it below.
Right on.
Thank you so much, Mark, for joining us today.
Thanks, Michelle.
All right. Woo-woo!
Did that go well?
That went well.
Cool.
Yeah, you know your stuff. Good job, man.
Good.
Yeah, so Jacob.
Thank you for that. Nice lovely flush in the middle of the video.
Yeah,